Oh man, so Bitcoin is running into a critical trap here on the 4 hourly candles. Could this lead to a major pullback? Is this the end of the rally? We've got a huge week here on the macroeconomic front as well, including Q4 revised GDP estimates. We also get the Fed's preferred measure of inflation in the PCE figures as well. We're going to break down a whole bunch of different key price levels here on the Bitcoin chart. I'm going to show you why this pattern is causing me a little bit of cause for concern. This is known as a diamond pattern reversal pattern. And yes, the name gives it away. It's a reversal pattern. It means if you were in an uptrend going into this pattern, you are very likely statistically to break to the downside. Now remember, technical analysis is not guaranteed. It's about statistical probabilities. And statistically, you are more likely to break to the downside here. And you can see if we take the measured move, you want to take it from the top side down to the bottom, apply it to the point of breakout. Let's say we break out roughly now, for example, the next couple of candles, and you will see this gives you a price target in the 25.5k region, which is very interesting because if you've been watching this content, we've been speaking for a while about the fact that 25.5k and around that 25k region is a very important level of support. I mean, even looking at the wider pattern we're in on the chart I'm showing you right now, you know we're in this upward channel. So you'd even want to test the top of this upward channel, which this would be. So that's one way to look at it. The other way to look at it is we know we're in our ascending broadening wedge. And again, we're testing this line. We're holding it. Let me just extend that there just a little bit. We're holding this line. Will we break to the downside? Will we need to come all the way down here, which is the next cluster of support at 25k? That would be the pullback. And of course, from a horizontal perspective, we know what we're forming, right? This was the 25k level, which we just worked so hard to break through. It was a huge level of resistance for us for a very long period of time. And I've been calling ever since this breakout, it's okay, guys. I know it doesn't feel good because we nearly touched 29, but coming down to 25k is not the end of the world here. And I will be looking for dip buys at this horizontal support, which is at 26. Let me just extend that line. So I will be looking at this 26 level for a little bit of a nibble, but my bigger entries on my DCA personally will be at this 25k level. Now also, as you can see here, on this 4 hourly chart, you can also see that we're forming this symmetrical triangle again. Can technically break in either direction. The bias currently sits that we could be breaking to the downside. If you've made it this far into the video and you someday want to be able to read the markets, do technical analysis, trade as we are doing on this channel, then perhaps you may want to check out my free technical analysis from scratch course over on SKILLSHARE. For those who aren't familiar, SKILLSHARE is an online education platform. You sign up for a nominal amount each month and you get access to a wide variety of different courses. I personally use it to learn all sorts of things, from video editing to financial to using Excel and various other bits and pieces that you may want to learn. It's far better than YouTube on those elements because on YouTube everything is about retention, whereas with a course you can put things in a structured curriculum, and that is exactly what I've done with my TA course. It's completely free for the first 30 days. If you click the link in the description, ijaz.uk/TA, to take advantage of the TA course. Let me know what you think about it and let's get back into this video. So again, giving yourself the measured move brings you initially to that 26,000 level mark. So I'm looking at those two key levels, 26, and if we lose 26, I'm looking at 25k as the next level of support coming in, and I'm not worried in the greater scheme of things. Another way to look at this is to look at our weekly head and shoulders pattern, our inverse head and shoulders pattern. So whilst on the 4 hourly we're creating a reversal pattern which will break to the downside, on the larger time frame, which is the weekly time frame, we're creating a reversal pattern which is going to take us from a bearish trend, which we've been in throughout 2022, to now trying to break into at least a sideways, if not bullish trend. And that's why we've got our medium-term price target here to work our way back into that 30 to 35k territory, right? Well, at least 35k here where the cluster resistance sits in that region. But before that, you can see we've had a big breakthrough the neckline of the head and shoulders pattern, and we've had 2 weeks here of doji candles, which is showing a little bit of weakness here on the weekly time frame here on Bitcoin. So we do want to see, are we going to come down and test the neckline, which again comes in at that 25 to 25.5k level. It's very normal on the break of the head and shoulders pattern to come test the neckline and then go for a breakout. You can even take the trade at the neckline, or you can take it at when it breaks the previous peak, in this case just shy of 29,000, which is where we initially got rejected. Another way to look at this is to, of course, look at our EMA ribbon. And we are very extended from our weekly EMA ribbon, which is fantastic. Again, provides room for us to come into our EMA ribbon around 25 to 24 point K. Look how they're all giving us same price targets. This is what we call confluence. If you haven't taken my TA course, ijaz.uk/TA, it's completely free. You're going to learn all these things. And also, if you didn't spot that diamond pattern, that's because you didn't download the free PDF down below. I've got a free cheat sheet. Why have you not downloaded it? Why have you not printed it? Why have you not stuck it on your desk? So that way these patterns stick out. That's how I spot them. Obviously, I've managed to memorize them and I'm very experienced at doing it. But if you're not, print it and keep it there and look at those patterns and see if any of those identify. Free PDF in the description. So that's what we're looking at here on the weekly. Let me show you on the daily the EMA ribbon as well. Again, very extended on our daily EMA ribbon. So even on the daily EMA ribbon, if we want to come and get a retest of this EMA ribbon, if we break to the downside from the diamond pattern I've just shared with you, or the symmetrical triangle pattern which I just shared with you, it's all the same. It means we're going to head down to 26,000 on the daily chart because that's where support starts to come in. Okay, but the bottom of the EMA ribbon goes all the way down to 24,000. So there's plenty of room for Bitcoin to come in, even if it wanted to go all the way into the middle of its EMA ribbon around 24. I know it doesn't sound ideal, but we can do that and still continue to work our way here on the daily EMA ribbon. So we're in a really strong position is what I'm trying to tell you. On the daily, we can afford a big retracement, and even here on the weekly chart, we can afford a retracement as well. So that is a good sign. Another way to look at some of the difficulties lying ahead is we are running here on the weekly into our all-important Bollinger Band upper band. Again, the Bollinger Band at the top can act like resistance, and you're seeing we're printed 2 doji candles, which doji candles show weakness in the bullish momentum. You can see RSI is topping out here as well. Very likely here, all the patterns that I'm showing you are indicating that we could be seeing a little bit of a pullback. And again, the weekly chart pullback brings you down to 21 at the center line. Again, I'm not going to call for 21, but I'm just giving you that as some perspective of where this trend takes you. Right, we managed to reverse here. So as long as we create a higher low, where our previous low on this doji candle here was all the way at 19,500, on a weekly candle, we're laughing. This is comfortable. Similarly, take a look at the same thing here on our daily Bollinger Band. On the daily Bollinger Band, we ran from the bottom all the way to the top. Perfect strategy, right? I'll link up a video here where I show you this exact strategy and how you can trade it. Wait for the Bollinger Band to hit to the downside, trade it all the way to the top side, right? Sounds simple, but I go through it all in detail with examples in that video, which I'll link up for you. But then we hit some resistance, right? So you would have exited your trade, but we entered some resistance, and now we're moving sideways. The question now is going to be, will the bulls continue to extend the trend? Will they show a bit more energy to the upside, which is going to be difficult because the RSI is topped out, the bulls are running out of steam. I've just showed you the doji candles on the weekly chart. Or are we going to come down, get back to base, which again is around that 25 to 24. Look at that. The red line here on that center line is sitting at 25,400. How many different things have I just shown you, which is showing you 25.5K? This is called confluence, okay? This is why it's giving me confidence around that level to put some dip buy opportunities. Now, it may never hit there, but that's where I'm looking for those pullbacks. And if I, more often than not, I'm able to buy on those pullbacks, then I'm going to make sure I'm not chasing green candles. I'm not buying into the FOMO and into the hype. I'm going to buy when it's more fearful. Because right now, fear and greed is sitting at 64. Now, I know it doesn't feel crazy like a crazy bull market, but there is greed in this market. So if we were to fall down to 25K, to 24K, all those people are going to panic. This is going to drop down into the 40s and into the 30s, and that's when I want to be nibbling again. Okay? When markets are fearful, that's personally when I like to buy. Still so much to show you guys. Make sure you're smashing up that like button if you're enjoying all this alpha. And we need to talk about this Bitcoin dominance. I'm going to show you this on the monthly chart because it's very, very important. On this dominance chart, look what you can see forming. This is what we call a double bottom pattern here on your Bitcoin dominance. So you can see here on the monthly chart, we've got support or neckline sitting at 48%. You've got the bottom line here drawn at 39.6%. And you can see that we've been behaving ourselves in between these ranges for a very long time. But what do you notice forming? A W pattern. How does a W pattern break out? It's a reversal pattern. Normally indicates a nice big break to the upside. But of course, we are running into resistance first. So that doesn't happen until we break. And even then, that could need a retest before then going to the upside and working its way to 52%. But before then, if we get rejected here from here, like we have here previously, as well, that could indicate a little bit of an alt season. Now, I don't think it's going to be a crazy blown out alt season, but we know primarily over the last few months here, there's been a Bitcoin-led move at 2020 to start off 2023. Now, sometimes that money needs to then flow across into altcoins. So it could be that we could see overperformance by altcoins versus Bitcoin if we get rejected from this level. If we don't, and Bitcoin breaks to the here and then there, you could expect another period where Bitcoin continues to outperform and altcoins still wait for their chance to catch up. No time to stop the alpha, guys. Got to keep it coming to you guys. And now what I'm showing you is the liquidity index. Remember, I've made a whole video about why we are now going to a new narrative, which is all about the Fed and them providing liquidity. We've looked at their balance sheet. You've seen that they've inclined their number of assets. The green line is their number of assets. The yellow line I'm showing you here is the liquidity index. This is when you take the number of assets, you take off the liabilities, and net, you're looking at, are they increasing their balance sheet or are they not? And you can see a sharp spike up here on the monthly chart, indicating that they have picked up a lot in terms of adding to their balance sheet. And that's been followed by 3 strong months here on Bitcoin to start off 2023. And this is a good sign. So we'll continue to monitor this in our videos to make sure that the Fed are printing, they're being accommodative, and that overall will be good for Bitcoin. And that brings me to our PCE inflation reading, which I will be bringing to you guys on Friday. This is the Fed's preferred measure of inflation. This previously came in at 4.7 versus 4.3% expected. So it came in hot. So we need to see this starting to behave itself and bringing itself to the downside. We will be covering that off together. On Thursday, we also receive our Q4 2022 GDP figure, which is now the second estimate. Okay, this is very important. The second estimate. Remember, it came in at 2.9 on the first estimate, and now they're expecting it, this next estimate, to come in at 2.7 on Thursday. So we will be looking at that together. Remember, markets will be looking to see, is this economy plunging itself into a recession? Is Jerome Powell damaging the economy, or are we managed to eke out some growth as they're trying to show us? On the traditional finance route, we also know that the banking crisis continues to linger in the background, but markets are trying to get on with things. They did have a positive week last week with the S&P moving over 1.4% and the Dow Jones adding 1.2%. The Nasdaq, of course, which is most correlated to Bitcoin, moving up a nice 1.7% last week. We want to see the same this week, right? If the Nasdaq can continue to move and have a nice green week, that's going to give a good foundational bedrock for crypto to continue to do well as well. You can see here in the pre-market so far here on Monday, we've got 0.4% up on the Nasdaq futures, 0.75% up on the S&P, and the Dow Jones the same. So things are looking positive to start off the week here as they try to hold some strength. But of course, if this banking crisis continues, if we hear more negativity around Europe, that could shake the traditional markets, but has proven so far to be really positive for crypto. So an exciting time to be here in crypto. I am in the short term looking for that pullback, but it doesn't worry me whatsoever. We've had such a nice extended move, and I have been calling for that 25 to 26k level as a pullback. I think it's completely healthy. It doesn't cause an issue. And look, if we don't pull back, that's absolutely fine. My bags are loaded. I'm enjoying this move. We're moving into a printing world, right? And if the Fed continue to start printing, we're going to end up back at crazy inflation figures, which proves the narrative for Bitcoin. More assets on the Fed's balance sheet, more accommodative policy as they move into more quantitative easing, and we're going to be in a happy position here in crypto. Thanks for watching, guys. As always, don't forget to smash up likes. Don't forget to subscribe. Take that free PDF below, guys. You want to be spotting these patterns, and I'll see you in the next one.